In this week's show, we've got Scott Paredes, a seasoned Treasury leader with experience across capital markets, transformation and risk. Before we get into the full show, here are a few short clips to give you a flavour of what we covered.
If you want to be a treasurer, what's the list of 10 skills that you need? And develop a plan for how am I going to get exposure to each of those different things. And you'd be surprised at how receptive your managers would be to hear you say, hey, can I help on the renewal of the ABL? Can I do the heavy lifting of looking at the operational aspects of the agreements and look at the covenant compliance process? Can I support that? And then I assure you that the treasurer is going to say, yeah, this is great. Not only that, but you'll identify yourself as somebody who's being proactive. So just engage in your own career. Don't allow it to happen to you. Make it happen for you. I love what I'm doing. Treasury is fantastic. I've done it for 25 years. It's a wonderful place where you can make a transformational impact on your company just by finding out what's relevant, come up with an innovative solution, collaborate with the right people.
Welcome to this week's Treasury Career Corner podcast, where I interview Treasury professionals about their Treasury careers. Each and every week, I'll talk to treasurers about how they build their careers, where they are now, where they see both themselves and the Treasury profession going to next. Let's get on with the show. In this week's show, delighted to be joined by Scott Paredes. Scott is a finance and risk management executive known for leading high-performance teams in global organizations. Scott and I have known each other for a while now, but what we've actually done is, I was talking to Scott a while ago. He's got some stories to share with you guys at World of Treasury, and I thought, let's get Scott on the show, and he could run you through his amazing Treasury career, some of his views on Treasury. So really looking forward to the show. Scott, I'll shut up. Over to you, sir. How did it first all start, and where are you now?
Thank you. I do believe that Treasury is the greatest career available in the working world today. It gives you so much different opportunity to grow and really make a transformational impact on your organizations. And so getting an opportunity to talk about something that I'm passionate about is greatly appreciated. And I think what you've been doing here now with over 400 podcasts is a great thing.
Well, take us back, because and you dropped a value bomb on me there that your twin brother's in Treasury as well, which is just ridiculous. Talk us back how it first all started, your interest in finance and the Treasury and your background. Over to you, sir.
That's great. It would be like having double exposure on your podcast. So it would be very interesting. Now, Steve Paredes is my twin brother. He's also in Treasury for the auto part company manufacturer in Michigan. He's my chat GPT for Treasury, actually. So whenever I have a question that I don't quite sure I know, I actually am able to pick up the phone and ask him. He's an incredibly talented, capable person. It's been great growing with him and bouncing ideas. And I think that really influences me from my career standpoint as well. The way that I learn, the way I think, the way I kind of make decisions is a very collaborative approach and bouncing things off with one another. And that's carried over into our careers where we tend to be very collaborative. In fact, when I started at Visteon, a position became available and Steve applied for it. He was working at Ford and then he applied for the job at Visteon. He got the job. And then within a short period of time, we were actually colleagues where I was running the commodities and FX hedging strategy and he was running the execution. That was one of the highlights of my career, to be able to spend so much time with my brother. It was great. I spent 6 years there. Visteon was the auto parts supplier to Ford, and then Ford decided to spin them off and focus on manufacturing of the vehicle. And so it was an outstanding opportunity where it was diverse in that 50% of the employees were from outside and 50% were carryover from Ford. And so we had this world-class infrastructure that was brought over from Ford. And then we had a lot of people that come in with new ideas about how to run Treasury. And that meld just really created a tremendous organization. I look back on that, and many of the people that I worked with in that Treasury group now are CFOs and treasurers throughout the business world. And in those 6 years, I worked initially on the pension side and the 401k, and then we did some cash investments. FX strategy and commodities was a very large part of my job for about 2 years. And then 9/11, 2001 hit. And the world was forever changed and impacted Treasury as well. I remember the day after 9/11, there was a lot of worrying about, oh my gosh, is the stock market going to crash? Is everything going to go to zero? What is going to happen to interest rates? LIBOR at that time was based on sentiment of 13 banks. And now it's a little bit different with SOFR, but how are the banks going to respond? How are they going to price commercial paper that I had to roll every single day in order for us to have adequate liquidity? And so that day after 9/11, picking up the phone and calling my CP dealers and saying, hey, how are we going to do? And how are we going to be able to place this? And there was a lot of uncertainty. There were a lot of companies that had the commercial paper market not been able to open up and be able to price it at an effective rate, it would have been in very dire straits. And so very fortunate. It was almost a patriotic feeling being able to, with the banks, to be able to open up and be able to take commercial paper and be able to place it was fantastic.
Yeah, but at the time I was working for Heidrick and Struggle, so I was there, and their head offices were on leading up to the towers, so it was a very challenging time for everyone.
The other thing that was happening was they had all of the different Enron and WorldCom and Arthur Andersen, all those crises took place. That was the kind of the impetus for, this is around 2002 where Sarbanes-Oxley got passed. And they said, never again are we going to allow some of these things to happen. And so we had to implement incredible amount of and document controls throughout the entire Treasury process in order to really give our CFO confidence to be able to sign off on the financial statements. And so building that out gave you kind of a lot of insight as to what are the requirements to be able to operate a treasury with the right controls in place. And then that has really kind of been a focus of mine throughout the rest of my career, is to say, okay, well, I'm seeing what we're doing here, but there's some gaps here and here. We need to address those things. After 6 years with Leon, I stayed within the auto manufacturing business, but this time on the finance side with a company called General Motors Acceptance Corp. They were the financing arm of General Motors. This is a company named Cerberus had taken the company over, and we're looking to kind of transform the organization from just a captive of General Motors to being able to finance autos globally. The first goal was all of our financings had a General Motors bankruptcy trigger in them. And so imagine a standalone company, General Motors Acceptance Corp, GMAC, which is later called Ally, having all of its financing tied to whether or not General Motors is going to go bankrupt. And lo and behold, a couple of years later, General Motors goes bankrupt. And so it was a critical effort for us to get hundreds of billions of dollars worth of financings refinanced, get the General Motors bankruptcy trigger out of the terms. We had dozens and dozens of banks involved in these different financings, and it was for billions and billions of dollars. And so after that first year of getting all of the bankruptcy triggers out, I was promoted to head up the South American funding. And so I worked in Brazil, Mexico, Ecuador, Venezuela, Chile, in trying to find ways of reducing the amount of money that needed to be funded by home office, and then funded through intercompany loans. And so historically, there really hadn't been much funding in places like Mexico. There'd been a little bit, but not a lot. And so it was a new asset class that had to be introduced into these markets. And what was interesting is that because it was so new, it really reminded us that we'd taken for granted in the US, any capital markets transactions is very easy to do, right? I mean, anything you can think of has probably been done before. And it's really about taking that document, fine-tuning it, and then doing a similar transaction. In Mexico, in Ecuador, in Chile, Brazil, none of these transactions have ever been done. And you've got local bankers that really don't know what they're doing. Their rating agencies are not really very well set up to know how to evaluate them. And so you really needed to bring the US technology to each of these markets, do a tremendous amount of education of the investors, the rating agencies, and even the local bankers. Part of that's done in that the global banks that you work with can kind of bring that expertise to their local colleagues as well. And it was just a fascinating experience of having to really know what you're doing, because you weren't able to rely on somebody else. You weren't able to rely on the good judgment of the credit agencies because they didn't understand. They weren't able to rely on the technical knowledge of the bankers because this was their first one. And so you really needed to bring your own resources from the US and implement them in each of those jurisdictions.
And Scott,
And that was
Scott, let me jump in. I recently had the treasurer of Inchcape, on the
yeah.
podcast, and when I was talking to Alex, he was particularly talking about how he had to then get regional support. He put in some regional treasury managers because they, as you say, in these developing regions, so they're mature, if you like, in some, they've got they've got some of the knowledge, but not all of the treasury knowledge in Latin America, for instance, and lots of other challenges they face. With that, how did you were the treasury director handling all that. How did you relationship manage that? Or how did you do that, again, for the listeners?
Yeah, I think the thing that really gave investors a lot of confidence is that it was the US technology that we're bringing over. And the success of which the GMAC has had in the US for many years. There were a lot of different financial transactions that were done, especially in Mexico, that were not well documented. The credit agreements and the indentures were less than stellar, let's say. And if you looked at some of the provisions in there, it was actually not possible for them to be in compliance with what the operative document said it was going to be. And so given that a couple of those transactions had failed, as well as there were a lot of mortgage-backed securities in Mexico that at the time were in default, it was a difficult situation. And I think the only way that the asset class could have been developed is through an organization that had such a long history of success. And we had good support by some of our largest banks, like HSBC was fantastic in that regard. It was right in the middle of the financial crisis. And so the edict was really, hey, we need to finance everything. If it's literally not strapped to the wall, let's get this financed externally because cash is king. And we don't want to be in the situation where we're having to take on funding for these different types of issuances. And so it was a sense of urgency throughout everything that we did. And it was absolutely exhausting. I look back on it now as kind of the good old days. The good old days sometimes are, things that were long enough ago that you can't remember how difficult they were. But it was a great experience and happy to have had that experience. And, as General Motors got closer to bankruptcy, I was looking for different opportunities. And it just so happened that there was a company called ENSCO that was a offshore drilling company in Dallas, Texas. And it was an opportunity for me to be an assistant treasurer. And the great thing was, I was looking at my skill sets that I had established at Vistion and at GMAC, and I've got some good capital markets activity. I've got a lot of risk management and treasury cash management, treasury operations. What I don't have is any experience in M&A. And so that was the first assignment for me when I got to ENSCO, was to lead up the due diligence and integration of the acquisition of Pride, which was another offshore drilling company that come together, they doubled the size of the business. The covenants in most of Pride's debt instruments was that there would be a acceleration upon a merger, a change of control. And so in addition to having to finance the actual acquisition, we also had to refinance most of the debt that Pride had issued. And so we had to refinance about $15 to $20 billion worth of capital markets activity. And we launched a commercial paper program, and the transaction ended up being extremely successful, both from a market coverage standpoint, very complementary coverage, and also from a synergy standpoint. There was a tremendous amount of synergies, and including within the realm of Treasury, where, rather than having two different companies getting rating agency credit ratings, now we had one very large company that was getting credit ratings. And so that in itself was a multi-million-dollar synergy for the company. And it was good to be part of, central to the company's transformation, right? To go from a company that was $3 billion to $6 billion and, refinancing 100% of their capital structure was a really great experience for somebody who came into the job, have never done an M&A, never done an acquisition experience.
And actually, before we move on, so when you'd not done all that M&A and, that was new for you, What were again, for someone listeners somebody else who's brand new to it, what was your checklist, or what, often we do that on the show, what were the key things you think to look out for?
Understand what the quality of the earnings are. That's the most critical thing. And understanding, how are they recognizing earnings? When are they recognizing it? What is the cash flow? Look at the cash flow. Don't realize so when you're valuing the company. If you've got a company that has some strong EBITDA, but they're not generating any cash, investigate why that is and find ways of fixing it. And then if you're going to, you can call it a multiple of EBITDA, but what you really need to be thinking about is what's the cash generation, and then multiplying the cash generation, and then using the EBITDA simply as a proxy for what your multiple is going to be, as opposed to strictly saying that you're going to, not all earnings is the same, not all EBITDA is the same.
Yeah.
Focus in on the cash.
There's different bits. And then you also mentioned to me before that those were the internal factors, but externally, there was a few other things going on with the drop of the oil price. Well, what was that like surviving through it?
That's right. And so, in a situation where from 2014 to 2015, the price of oil went from $130 to $30.
Yeah.
And in that type of environment, it's very difficult to focus on the day-to-day. Everything is focused on cutting costs, reducing headcount. And it's critically important that the blocking and tackling continue to be done. And so that was a very difficult part where we're having fewer and fewer people having to support the same amount of workload, and then having to go through and say, okay, we need to triage this and figure out what's most important for you to do and what's least important for you to do, and focus on those things that are likely to potentially cause us increased risks, like fraud risk is a perfect example of something that you need to make sure when you're understaffed, you're having adequate controls in place for that, especially for a publicly traded company where the CFO has to sign off on the financials.
And so then talk us through some of the next moves and what happened with you as you progressed.
So I ended up at a company called Southwire. It's an incredible company. They are the second largest wire and cable manufacturer in the world. And it's owned by a fantastic family that has done so much for sustainability, really helped the community in so many ways, and has really been on the leading edge of ESG and sustainability way before those terms were ever invented. They very much looked at the company as a reflection of themselves, and wanting to treat all of the employees, customers, and their community in a way that reflects positively on their family. And so it was a really great experience, and really nice to feel part of something that is good. In 2013, they were one of the first companies to do a sustainability report. And they issued this sustainability report. It was something that, as a treasurer, seeing all of the financial institutions now starting to kind of get on the bandwagon for sustainability, the finance companies and banks really started to take the lead on ESG and sustainability. So it gave me and the Treasury team an opportunity to kind of be central to that by looking at how can we improve our funding using sustainability. And at that time, there had been some different companies that had done sustainability bonds and sustainability loans, but it was kind of fragmented. It wasn't structured the way that we really wanted it to do. In most of these cases, what they've said is that you can do a bond, we'll give you better pricing, but it has to be a restriction on the use of proceeds, on how the proceeds of those bonds has to be deployed. And that wasn't going to work for us. And so we looked at our capital structure, and we had an asset-based loan that, although there never been a sustainability-linked asset-based loan, we thought that there was a real opportunity there because we had the sustainability report. We were already tracking our emissions, and we had set very specific goals to reducing CO2. And so we had all the framework necessary to do it. And we needed to kind of find a bank that would come along with us to do a sustainability linked loan. And what it allowed us to do is that so long as we stayed on track, we were actually able to get a reduction in the price of our borrowings, our committed and drawn pricing. And if we fell below goal, then our pricing would step up slightly. And so it put a financial incentive for doing what was already central to the company. It ended up being the first asset-based loan, sustainability-linked asset-based loan. Interesting story. Within the same week that our asset-based loan closed, so did U.S. Steel's. And so U.S. Steel and us did it within the same couple of days. And every time I see the treasurer or the assistant treasurer at one of the bank conferences, I'm always glad to see them and share stories about how we were both working on a very similar transaction at the same time and how we finished it during the same week. So it was neat.
And before you move away from the sustainability piece and the green sort of agenda, if you like, where do you see, green financing fitting in at the moment?
I think from a financing standpoint, it is not the hot area that it once was. If you recall, there was socially responsible investing for many years, and that's still out there. I think ESG is still going to be very popular from a reporting standpoint. From a financial kind of bonds or sustainability linked loans, I think the structuring is going to be a lot different because there was a lot of pushback within the financial community that was saying, well, these are things that the company is already doing. And so we have to be careful about giving them financial incentives to do things that they were already going to do. And so from a scrutiny standpoint, it's more challenging now than it was in 2021. So I don't think that it'll be coming to the forefront that it was back in 2019 through 2022. But I do think there'll still be opportunities for companies that are comfortable with use of proceed restrictions.
And eco battle, what happened next sort of thing?
The funny thing is COVID hit Southwire. And that was, again, a situation where internal controls come to the forefront. You've got an issue there where everybody's working remotely. This is the first time people have done this. And are we still abiding by the controls that we did when we were in the office? And we had a circumstance where we made a payment that ended up being fraudulent. Picture this. It's 5:00 in the afternoon. I'm sitting by the pool with a Heineken, and the phone rings, and I answer the phone. It's the Secret Service. The Secret Service is calling me and saying, Mr. Paredes, are you the treasurer of Southwire? Yes, we have a suspicious payment that we'd like to ask you about. I'm like, oh my goodness, what is this? This is not the way you want to end a week. We dug through it, and it turns out that the recipient that we were sending the funds to, their account had been hacked. Instead of us communicating with the actual person that we were trying to get the wire instructions from, we were actually communicating with a fraudster. And just by the grace of God, we sent money to a South African bank. That bank, 2 days prior to receiving our payment, had just been through a training session with the Secret Service. I had trained them to say, hey, if you see a funds that where the balances hadn't existed before, if the beneficiary name didn't match, if there's been no activity in this account, flag that, let us know. Flags. And it just so happened that just because they had that training a couple of days prior to that event, we were able to get back 100% of the funds. That was great.
Yeah.
But it was a very disturbing situation, like that could happen. And so we responded by developing a cyber fraud solution that really greatly diminished the likelihood of having that reoccur again. And it was a very structured workflow where throughout the entire process, there were people attesting to them having done a very specific task. For example, that they actually talked to a known contact at the beneficiary, that they spoke to them by phone or by video call, as opposed to relying on any email communications. And then throughout that, we established all the documentation that was required, and then ultimately released the payment after gone through multiple screens to ensure that this was a valid payee. We submitted that process to Treasury Risk, and we were a recipient of the 2022 Alexander Hamilton Awards. And so that was a great accomplishment of turning into lemonade, and very happy about that. The last thing I'd just talk about at Southwire is that because it was so much a reflection of the family and it being so important that we do the business in the best possible way, it gave us an opportunity to kind of collaborate with other customers and suppliers and say, how can we work together on a sustainability issue? Or how can we work together on payment terms? How can we work together? And we found a number of different outlets just from a sustainability and ESG standpoint to partner with one of their biggest customers Home Depot. We also were able to work with Home Depot to say, hey, you guys borrow for essentially nothing. It's free. We borrow at a price that's much higher than yours. Is there a way we can work these payment terms that's mutually beneficial to us, where you are able to use your capital and we're able to improve our cash flow? And through that dialogue of reaching out to your customers, we were able to find a solution that was mutually beneficial. And so that was a great part about Southwire, the way that the company ran its business so ethically. In 2022, I was approached for another very new opportunity. There was a company that was called Ecobat that had recently emerged from bankruptcy. It was really a debtor-lender dispute where the lenders, in order to maximize recovery on their loans, took possession of all the operating entities. When that happened, there were no shared services. There was no legal department, HR, no finance, accounting. Our CFO found a management team to bring in to transform the company so that it could be sold through an IPO, a strategic buyer, or a PE. And we thought we'd be able to get that all set up within about 2 years. Took about 3.5 years to get that all set up. But the key challenge from a Treasury's perspective in that situation was the company was being run as kind of a private equity investment by asset managers.
And what was the company? What was sort of the main industries?
Yeah, Ecobat was the world's largest lead recycling company. And so it was an interesting company in that over 99% of all batteries end up getting recycled and then reused. And so some of the batteries that are in people's cars right now, that lead can be traced back to Roman times. It's incredible. And so it was a very sustainable kind of business from an environmental standpoint. And it had been in business for 75 years. And so it was well established, well known within the battery manufacturing companies. And so, the key challenge that we had when I came in was, in order to maximize recovery, the first thing that the new shareholders did was they took a very large dividend. And that left the company cash poor. And given the nature of its business, it had a very difficult time generating adequate cash flow. And so the real challenge was, okay, well, first of all, how do we get visibility on cash? And so we developed a very robust and continually improvingly accurate cash forecast. We diversified where our funding sources were. When we came in, there was an asset-based loan, and that was it. And so we were able to diversify by looking at capital leases. We were able to diversify through improving our working capital. We were able to diversify through finding ways of monetizing our receivables at a faster rate than the organic payment terms. And so in addition to refinancing our debt and diversifying it, we were also able to be very aggressive at collaborating with our suppliers and our customers. And what's interesting about the working capital area is that there are a lot of ways where it can be a win-win situation for the suppliers and for customers. The company's most important thing was we needed to be able to manage cash and have more cash. And so that was the goal. That was how we became relevant as a treasury group. And then the second thing we needed to do is to say, okay, well, how do we innovate? How do we do something differently than what we've always been doing it? And then, okay, well, here's a solution that we can use. Let's find the people that we can collaborate with and reach out to them. And then once we've done that and we've got a solution that works, let's continue to improve it. That approach worked especially well with our largest customer. Our largest customer was a battery manufacturer, Clarios. And we found a solution where we would be able to use letters of credit that would allow them to extend their payment terms to 180 days and allow us to draw on the letter of credit and get paid within a handful of days. And so there's a situation where the cost was very low. It was covered by the customer, and we were able to accelerate about $50 million worth of cash. And so as treasurers, what I always want to kind of share with people is don't get trapped in a box of what Treasury is allowed to do or Treasury can do. Everyone understands that Treasury owns the bank account administration, the cash forecast, and but it's so much larger than that. What you really, as a treasurer, need to do is to focus on, okay, well, what is the central most important thing of the company right now? So at Southwire, my example was ESG, sustainability. How can Treasury be a part of that? And so we did the sustainability linked asset-based loan. At Ecobat, the real challenge was, okay, we need to manage our cash and get as much liquidity as possible. And then as a team, we were able to think about being a strategic partner to provide the cash flow necessary for growth, as opposed to the one that's just keeping score of the cash. As treasurers, that's the real opportunity to become relevant through innovating, collaborating, and then once you've got a solution in place, continue to grow it, continue to improve it. And that's something that has driven me throughout my career.
A lot of the time, I try and get people to, people to measure their success and things. And maybe scorekeeping is one of the ways, but maybe we've gone too far that direction. How do you not keep score? How do you see the bigger picture then?
So here's the thing, it's like, no matter what you do, you can always drive continuous improvement, but you're not going to really make the transformative impact by just incrementally getting better, better, better. You have to constantly be thinking about, should we be doing this? How can we be doing it differently? And so being different is a lot more impactful and successful strategy than trying to be better. What I'm saying is that in addition to continuous improvement, you need to look at what you're doing and finding out, is there a better way of accomplishing it? And so, we could have at Ecobat, for example, we could address the problem, which was we weren't generating enough cash. So how are we going to focus on right sizing our inventory, doing a top to bottom screen of every single SKU and saying, hey, why do we have 100 days of inventory for this? And we only have 2 days in inventory of that. And then optimizing what you have in inventory, looking at your payment terms with your customers and suppliers and saying, you know what, here's our metric. Our metric is going to be continuous improvement. Our metric is going to be our customers need to cover the float our suppliers need to cover the float that we give to our customers.
Yeah.
And then that's driving continuous improvement. But then the different part is, okay, well, how do we find solutions to make that beneficial to both the customer and us, or both the supplier and us? Look at what you're doing and do it differently.
Yeah, and measure it in a different way. And so then bring us up to date. What's the most recent, or what do you see as the challenges for treasurers, as they stand today, sort of thing?
I'm trying to think here because somebody told me a line about AI that I thought was just perfect. It said that AI, here we go. So AI is not going to replace all the treasurers.
Yeah.
But it is going to replace all the treasurers that don't use AI. And that's so true. What's very obvious to me is that there's going to be fewer people, and we're going to have to find ways of using AI to streamline what we're able to do in a 40-hour or 50-hour work week. And for people that have been in the workforce for a longer time, new technology, we're kind of the last to adopt it. And so what happens is you need to really engage with the younger people in your team and sit down with them and say, hey, well, how are you using Power BI? How are you getting this information? How are you using AI? Because it's amazing how innovative they are in using it. And so for the leaders of the Treasury Group, go to the people that are coming into the workforce right now that have been trained using AI and using all of the technology at a level that we haven't. And so there is some truth to hard to teach old dogs new tricks, because that is true. You need to find ways of consciously overcoming that issue. And so I think AI is going to be very important. I think a huge risk that comes with that is cyber fraud, cyber risk, people hacking into databases, and the potential for losing money from fraud is higher today than it's ever been. And it comes back to internal controls. And I think the next part is there's going to be more. I mean, right now, for about probably the last 10 years, you've seen a continued increased sophistication in how companies manage their working capital and looking at ways of having intermediaries come in and improve cash flow. Supply chain finance is kind of the longest and oldest one that's been out there for a long time. I think that part of the solution lies in looking at how companies finance inventory, because it's incredibly important. And we learned this during COVID, where the supply chains got so disrupted that they need inventory. It doesn't necessarily mean that you need to have the inventory on your balance sheet at all times. And so finding ways where you can intermediate to create a synthetic type of just-in-time arrangement is going to be critically important. And treasurers are going to be central to that goal.
And if you're reflecting back, you've had this illustrious career for many years, you've gone through exactly as you described there. If you're more early, starting out in your career, you're more junior, what sort of advice would you give to those folks?
If you're early on, think about your career as a quiver of different arrows, and each arrow represents a skill. Right. And find ways of getting exposed to as many things as possible. And seek out opportunities. I mean, I think this is true, just general human nature. It's just people wait for things to come to them. Be proactive, engage in building your own career. If you're in a position that you think you've kind of topped out at, you need to express that, and you need to actively pursue opportunities within the company you're with right now and potentially outside the company to find that other skill. I mean, my example was I moved from a company that did capital markets transactions once or twice a year, and then moved into GMAC, and wow, we did $25 billion worth of capital markets transactions every single year. And then after that, I said, okay, well, I don't have any M&A experience. And so I moved into a company that their primary goal was M&A. If you want to be a treasurer, what's the list of 10 skills that you need? And develop a plan for how am I going to get exposure to each of those different things. And you'd be surprised at how receptive your managers would be to hear you say, hey, can I help on the renewal of the ABL? Can I do the heavy lifting of looking at the operational aspects of the agreements and look at the covenant compliance process? Can I support that? And I assure you that the treasurer is going to say, yeah, this is great. Not only that, but you'll identify yourself as somebody who's being proactive. So just engage in your own career. Don't allow it to happen to you. Make it happen for you.
Great final words. A great wrap up. And we'll put your LinkedIn details in the show notes so people can connect to you. Any sign off words or anything else except for that people should be connecting to yourself?
No, I love what I'm doing. Treasury is fantastic. I've done it for 25 years. It's a wonderful place where you can make a transformational impact on your company just by finding out what's relevant, come up with an innovative solution, collaborate with the right people, and then execute, giving me the time to be with you.
No, thank you. Before you finish today's show, a quick reminder. You can earn CTP credits just by listening to the podcast. Listen to the show, take a short online quiz, pass the quiz, got to do that, and then we'll send you CTP credits. This means you can recertify, which I know you have to do every 2 years, and lots of people do it. It's so convenient. They do it whilst they're commuting, they might be at the gym, walking the dog. We're there to help you. It's designed to fit around you and your real treasury jobs, not add more work to it. If you're already listening, you might as well get the credit for it. All you need to do, head to the episode page, take the quiz, and as I say, as long as you pass, we will send you the CTP credits. I know, it's all part of the service. Thanks again for listening. We appreciate your support. I'll see you soon. Thanks.